What is up, guys? This is Shix here from Magnet Crypto, and welcome to another episode of TradingView tutorials for crypto. Before I begin, I would really appreciate if you subscribe to the channel and like this video if you get value from my videos. So in the last video, I covered basically what you're seeing on the screen here. I covered all the instruments that TradingView has to offer and what they mean, so that next time you look at a chart, you can actually look at all the instruments and not get scared away by all the flashing lights. You can actually look at it objectively and actually kind of analyze the price. So let's get started with today's video. What we'll be covering today is a very common method called a top-down approach. Using the top-down approach, we'll be looking at key levels, and some of these key levels relate to what is called support and resistance, and we'll be using a straight line tool to mark out these points. So let's get started. So a top-down approach is very straightforward, as you might guess. It means that you start from the top and work your way down. Also, even though it's called a top-down approach, you would normally work from left to right using historical data, as it has a little bit more validity, especially if you've seen certain points get hit more than once. So let's firstly talk about support and resistance. Support and resistance basically means, firstly, support means when price is falling, like for example here, and it hits a certain point and reverses and goes the opposite way. So it acts as support and reverses the other way. Resistance is the opposite, when price is rising, hits a certain point and reverses and goes back down. Now there are major support levels and major resistance levels, and you can tell this by these big swings. So this is a big swing high and a big swing low. So this top bit would be like a major resistance level, and this bottom bit is a major support level. Another point about support and resistance is that often if support gets broken, so for example here, if it gets broken, that same level can often become a resistance in the future. In this case, it hasn't happened, but as we do a bit of TA, I'm sure I'll find some levels to show you. So support, when broken, can often become resistance, and resistance, when broken, can often become support. So let's start doing this top-down approach, and we'll mark out some key levels. So I'll be using the horizontal line tool. I've got my little floating toolbar here. What you do basically is on the left side, you click on this line, and you got the horizontal line. As I'll introduce more tools, you can click on the star and it becomes a favorite. So, and then you have your favorites over here. Obviously the ones that I use most, I'll have favorited. So let's start. So using horizontal line, mark out the big swings to start off with, and even the smaller swings. Now I forgot to mention, I am on the weekly time frame. So what this means is that each swing, all the swings and points that I'm marking out, have more validity because there's more data that goes into them. For example, every bar equals 1 week of price data, and that is a lot of, in terms of volume, that's millions of dollars kind of circulating. So every point has a lot more strength behind it. So in the future, it's more than likely it might get hit. So if you mark that big swing there, you can mark another here. The more pronounced the swings, the better. But you can see here, this is a nice swing. Over here as well. You can literally mark out every kind of swing and see if it's effective, and we will see in a moment. Also the swing lows, so that was a high and that's a low. We'll mark that point right there, and also this point here. Right, so by the way, if you want to zoom in, just drag that up and zoom out, drag that down. You can also do that to kind of squash it, or you can elongate it that way, so you can have it nice and large. Okay, so as you can see, these swings are you can see the key levels, as this is from back in January. Now if you move across over here, this resistant point over here, resistance, became resistance in the future as well. So it's a very key level, which you can expect in the future to be hit again once it kind of climbs back up. Same for this point over here. You can see it was resistance, it broke past it and it became support. It bounced off previous resistance, rejected off there, reversed, and it kind of hit that support level again, broke through it, hit another resistance level, bounced up, and then again that support became resistance. So you can see that these levels are key. So if you mark them out in the future, you can expect either a rejection or for it to be broken through and maybe turn into the opposite as time goes on. So very, very key levels, especially on a weekly time frame, as there's more data that goes behind it, so it's more valid. So that's how you basically mark out these key levels. Very useful approach, very good for kind of looking at a chart, whatever asset that may be, and you can kind of for yourself judge whether maybe it's a good time to buy or a good time to sell. So maybe it'll be a good time to sell at a major resistance level in the future. So let's say you bought here and you expect the price to rise, you may want to sell just before this point over here, as it's a key level of resistance. So that's one way it can be useful for you. Also, a bonus kind of thing to think about, which will help you with kind of, especially in the future when price is going to new points where we have not been before, and that's the concept of big even numbers. Now, as this market is driven by humans, just like us, we tend to think in a similar way. As much as we might think we're all different, we often think in predictable ways. And if I said to you, what points do you think are going to get hit from 0 to 10? A lot of people, although they might think it's random, will tend to hit the same areas, like they might say 2 or 5 and then 10. These big numbers are reflected in the charts as well. So as you can see here, this major level is just short of 20,000, which is obviously a multiple of 2. So key levels, mix of big even numbers, very good for kind of predicting in future. It'll help you to anticipate where price might hit a little juncture. So combine that with your analysis, with your top-down approach, with support and resistance, and you'll have a very good kind of trading approach. Also, a good exercise you could do to help kind of strengthen this skill is just look at previous price data and try to mark out some key levels for yourself. So remember, the big swings is where you want to mark your points or mark your line. The bigger the swing, the better. So sorry, I tend to just look across, but this is a point right here where I marked. and this point right here, just the bottom of that swing. Let's see, maybe another point here. So for example here, let's look at this again as an exercise. So for example, this point here, major swing up, swing high, absolutely the top of the previous peak. You look across here and it acted as resistance once, twice, broke through it, and it acted as somewhat of support there. This point here, quite a large swing high, acted as somewhat of a juncture, a bit of resistance here, and then support going up higher. This swing low right here acted as a bit of resistance here, and then some support and more support over here. So you can see even here a support level turned into resistance, tried to break it, failed, broke it, and then turned into support. So just try to mark out these key levels. Very effective, absolutely fundamental part of investing and trading. It will allow you to kind of look at a new chart and analyze yourself and see, okay, maybe if I invest at this point here, I can expect some resistance in the future, so I might just sell over here and maybe expect wait for a little drop and buy back. Because this is such a big swing and such a big price point, a major point of resistance, you can kind of anticipate in the future this is going to be a big point of resistance. Okay, so that's all for today. I hope you got some value from it. I'll be making some more trading view tutorials in the future, and please don't forget to subscribe and like. I would really appreciate that, and have a lovely day. Peace.